Welcome to Trade Talk, the podcast where construction pros connect, share, and grow. Brought to you by Contractors Connect, this show dives into real-world issues facing today's builders on and off the job site.
Whether you're swinging a hammer, running a crew, or scaling a business, we've got the insights, stories, and expert tips to help you level up in the building industry.
I'm Sarah White.
And I'm Erin Bacher. And together, we'll be talking shop with industry leaders, tradespeople, and innovators who are shaping the future of construction.
Let's get to work. This is Trade Talk. Welcome back to Trade Talk, the podcast where we help contractors build better businesses. I'm your host, Sarah.
And I'm Lindsay. And if you are a contractor who has been putting off taxes, this episode is for you.
Yeah, so taxes are changing again in 2026. And so we're going to talk to an expert and get all the info on what changes.
Yep. From depreciation and deductions to accounting methods and 1099s, she's got everything that we need to know.
Yeah, we're going to break it all down with Rebecca Kelly of Testu and Taylor. She is a local CPA and she does a lot of work with construction companies. So I think she's got all the insight to help our listeners plan for the year ahead.
Yep. So let's jump in.
All right. If you're in the construction industry and your marketing feels more like a punch list than a plan, it might be time to call in the pros. At Bespoke Consulting, we help contractors and construction businesses get noticed with branding that builds trust, websites that convert, and marketing strategies that actually move the needle. Want to grow your business without wasting time or money? Start with Bespoke. Learn more at bespokeconsulting.com.
Hello, Rebecca. Welcome to Trade Talk. Thank you so much for joining us today.
I am so happy to be here, Lindsay. Thank you for inviting me.
So for our listeners who may not know you yet, can you tell us a little bit about your background and your business, Testu and Taylor?
Sure. I am an accountant. I've been an accountant for a very long time. I started in this industry in tax in 1997 in Atlanta and spent about 26 years of my career in Atlanta. Our family had the opportunity to move to Florida, so we moved the headquarters for our small practice. I was with a big firm for a very long time, and then left and started my own practice. That's Testu and Taylor, and the work that we do is really kind of helping our small business community take advantage of, understand, apply the tax benefits that we get and to their tax returns and manage their tax liabilities. So that's what we do.
Awesome.
All right. Yep. Rebecca's our accountant.
Yes. So you work with a lot of construction and trade-based industries. What makes their type of business a little bit different as far as like tax planning, and why do you enjoy working with them?
We love working with our trade-based businesses, our construction companies, and they are the business itself. Probably the biggest difference we see is cash flow. Cash flow is it's a focus for that industry. Understanding, they have it's kind of feast or famine when they're working. The other thing, and that translates to us in tax planning, what we call methods of accounting for their income and expenses to help create more cash flow and even out their tax rates and their tax liability.
So for listeners who maybe don't follow legislation as closely, I know there's been some changes that came with the One Big Beautiful Bill Act. Can you kind of tell us some highlights from that?
Sure. So we had a new piece of legislation that passed this past summer. It passed in July 4th, and we in our practitioner didn't expect it to go through so quickly, but it did. And it was a big piece of legislation, and there were a lot of pieces around that legislation, some of which applied to 2025 and some of which apply to 2026. And one would call it a very pro-business piece of tax legislation because it really drives or incentivizes, if you will, capital spending, investment. It incentivizes hiring employees onshore in particular. It incentivizes more spending and lending through some interest rate provisions that are more favorable for businesses. So just a lot of really good things that businesses can take advantage of as part of this new legislation.
Awesome. And so for construction businesses in particular, what should they be aware of or, thinking about in 2026 in regards to this?
What we've been working with our construction companies on, particularly around this legislation, is some of the accelerated provisions around depreciation deductions. And so we're going to talk about that, I know, a little bit today. We get accelerated depreciation We have more favorable R&D expensing. We have more favorable interest expense rules. We are going to have some changes with respect to our information reporting that's going to impact contractors as well. So that's something to pay attention to. And we'll talk a little bit about that. We're going to talk about the QBI deduction and what that looks like for us in 2026 going forward, as well as some changes to meals that are going to be a little bit tougher for us to follow.
So contractors, we know, are always buying trucks and equipment and those sorts of things. And you were just hitting on how you can write those purchases off. So can you explain Section 179 and how that works?
Sure. Section 179 is a provision in our Internal Revenue Code that allows for current expensing of assets like trucks and equipment. We have another code section called 168. And you might hear that termed a lot, bonus depreciation. It's actually depreciation. And within that is what this concept of bonus depreciation is. And those are two areas of the tax code that are helping to incentivize these capital investments. They allow for businesses to currently deduct the entire cost basis of those assets in a given tax year in the current year. So if we buy a piece of equipment in 2025, as long as we bought that equipment after January 19th, we can look at both of those code sections. So there's a little bit of a timing item, but that's what those code sections are designed to do, is allow for that current deduction.
Awesome. So a little earlier, you mentioned the term QBI. Can you tell us what that actually means and who qualifies for it?
Sure. So the qualified QBI stands for Qualified Business Income Deduction. And this was a deduction that came into play actually in 2017. What it was intended to do was to even out the playing field between our flow-through businesses. So a lot of our contractors are set up as either S corporations or partnerships, and those are flow-through businesses where the tax is paid at the individual owner level. The intent of QBI was to even out the playing field between those types of businesses and C corps. We reduced our C corp rate from like 35% to 21%, and then this QBI deduction was intended to provide a reduction in tax for our flow-through businesses. So what that means is, at a very high level, when we calculate our business income for the year, we're able to take a percentage of that as a tax deduction on the individual owner's tax return. And the QBI rules were made permanent with this new tax law. So they were set to expire along with a number of provisions that were in our current code. And this new tax law allowed that deduction to be permanent. So that's that allows, a little bit more clarity going forward as far as entity selection, how you want to be taxed, whether it be a flow-through entity or a C corporation, because you have the ability to choose those when you're doing your tax planning.
I know this is something we have talked about with you as well, and accounting methods, a cash versus accrual. What is some information that helps a company decide which is better for them?
Well, it depends, and this is big. This is huge for the construction industry. In fact, of all of our industries, this is the biggest topic for them. It depends on when we account for income and expenses. And what we want to do, Sarah, is we really want to match those items. We want to match when our income is being reported along with the associated expenses. When that doesn't happen, which can happen, well, does happen in the under a cash basis method of accounting and construction, then you have wild swings in income. And what that means is 1 year you can owe a lot in tax, and the other year you might get refunds. But over time, that produces a really bad tax result. You end up paying more in taxes. Also, you get more visibility on your tax returns when you see these wild swings in income and expense. So when we're working with a company or a construction company, the first thing we do when they come to us, if they're on a cash method of accounting, is we start talking to them, okay, let's think about whether or not we should be looking at accrual basis method of accounting. And here's the thing, it's more complicated. It's more complicated to account for your income and expenses on an accrual method because and just to back up, the cash method is we account for income when we get the cash, and we account for expenses when we pay the expenses. But under the accrual method of accounting, we account for income when we earn that income or provide those services or build that that unit, that structure, and we account for the expenses when we're accounting when we're incurring that income. So it matches. So we talked to them about changing those method of accounting. Under this new piece of legislation, the IRS has broadened the types of methods that we can look at for construction companies. And just real quickly, there's two that we look at. We look at completed contract method of accounting and percentage completion method. And so they have more flexibility in looking at methods. That's something we would encourage all construction company and general contractor trade businesses to look at.
Yeah, I can see how that would really make a difference for sure.
Absolutely. Okay, well, go ahead and break the bad news. Tell us about the changes that come with the new meals and entertainment expense write-off, or not so much anymore.
Since since I've been working in this industry since 1997, we've seen a number of series of changes in this area. The IRS just does not like meals and entertainment. And
But we
our
do.
latest change is, we do. And as employers and as construction companies, it's ways that we can give to our employees, right? We can feed them when they're on the job. We can provide for before and after meals and office snacks and all these things that we do for our employees. The IRS is tightening those rules once again. So meals have historically, or in recent times, I should say, been deductible at 50%. Entertainment in recent times is no longer deductible. So, for example, if you go to a golf outing, you can pay you can pay for the food and deduct that with your employees, but the cost of the green fees or the golf cart rental, those types of things, that might not be deductible because that's considered entertainment. Under these new rules, what they've said is any kind of meals that are for the convenience of the employer. So in the construction industry, if we're feeding our crews on site, those types of meals, those are no longer deductible. Now, other meals, business-related meals, those are still deductible at 50%. So they're just tightening the rules in that area. And this is going to be a challenge. This is going to be a challenge from a record-keeping perspective and keeping all of that separate. The other thing that businesses are certainly looking at is where can I now call some of those snacks in the office expense potentially, right? So they're really taking a peek at how we can now account for things a little bit differently and how we capture these costs separately, because now we're going to have to treat them differently on the tax return.
But I think you said it still applies to clients, just not employees.
That's correct. So there again, these meals that we're talking about and these new rules are all around meals for the convenience of the employer. So anything that revolves around the employee on site at work, if we're feeding our team late night in the office during busy season, that type of meal doesn't qualify, right? But if we're taking bespoke out for lunch as a client, that meal we would still be able to deduct at 50%.
Okay. Well, that's a real bummer.
That is. Okay, I think we are a little bit past 1099 season, but, looking ahead, can you give some tips for especially those in the construction industry of how to, stay prepared for that? Because I know that was a learning curve for me. In my first year, I had to prepare them for everybody. I was scrambling. So what are some things throughout the year that construction businesses can do to just make sure they're ready for the following year?
Right, and know the difference between the types and which ones to use.
Sure. So 1099 reporting, why do we have it? Because it's just a pain, right? It's a lot of work. We are just coming out from that season. I totally understand what that feels like. We help our clients meet this compliance requirement. It's important to the IRS. We know it's important because now they have questions on the tax return that we have to answer around 1099 reporting. And when that happens, it takes many levels of authority to get anything changed on a tax return. And so we know when a question hits a tax return, it's something that the IRS is focused on. And here's what they're focused on. They perceive this big gap in missed income. They don't believe that they're capturing all of the taxable income, and particularly around these areas of labor, right? Contract labor, if you will. So they've instilled this question that we have to answer on the return that says, do you have 1099 reporting requirements? If so, did you file all your 1099s or will you file all your 1099s? So there's different types of 1099s. The one that we most commonly think about is the 1099 NEC, and that's for anybody that is providing a service or labor for that company. So for example, in the construction industry, any of your subcontractors that are working for you on a job site might need a 1099. The reason why I say might need is because we don't have to issue them to corporations. Now, how do you know? Well, you get this form W-9 filled out, and here is the best practice. Is get the W-9 before you start paying the contractor, and that will help avoid the stress at the end of the year and not knowing who to issue 1099s to, and not have all of the information that we need to issue those 1099 NECs to. So that's kind of the big item that we see at year end. And, typically we're going through the financials, identifying who needs to be reported in those particular areas. What we look at is repairs and maintenance, subcontractors, of course, right? But also repairs and maintenance, advertising, accounting services, right? So any type of service revenue that you're seeing, that's going to be a 1099 NEC. Now, outside of those forms that you're reporting, you might also be paying rent. And if you're paying rent, you might need to send out a 1099 MISC for those types of payments. Or if you have any kind of interest payments that you're making, not to a major financial institution, but if you have a loan that's, with a small, or individual or whatever the case may be, and you're paying interest payments, you might have to issue a 1099 INT. One thing that's important to know, lawyers, regardless of the amount or the structure, they always require reporting. I mean, you can read into that what you'd like to, but you have to always send out a 1099 if you have legal services. That's something that we see missed quite frequently. Now, here's the good news. Are you ready? The 1099 reporting requirement burden is going to be lifted just a wee bit next year. So they haven't changed this in, I don't know, 100 years. It hasn't been around that long, but it's been a long time, and they haven't changed it. Historically, and even today, we had to report if we had paid an individual or an entity above $600. They're going to raise that limit to $2,000, and so that's going to be going forward. So that's a good thing. Another important point that a lot of businesses miss: if you pay that individual with a credit card, then you may not have to do a 1099 because the credit card company will issue that reporting. So sometimes you want to kind of look and see how you're paying the individual. So it's who you're paying and how you're paying. Out of the gate, get that W-9 completed, and then you can kind of sort through the rest of it, as you're kind of finalizing everything at year end. That's the piece that we see is hardest, is who do we need to pay and where is their information?
When it comes to internet, faster matters, but local matters more. Live Oak Fiber is your proud community-focused fiber internet provider, delivering fast, reliable internet with symmetrical upload and download speeds. Perfect for both homes and businesses. Plus, with friendly local customer support, you'll always talk to a real person who actually lives here. And this February, new customers can choose either a streaming credit or a gift card when they sign up. Call 850-502-5842 to get connected today. Live Oak Fiber, connecting our communities with fast, reliable internet. Okay, so we are at the beginning of the year right now. Are there any tips that you would have for our listeners of things that they need to stay on top of to make the end of the year smoother?
I think we talked about deducting equipment and the benefits of having these accelerated depreciation deductions, and they are wonderful, right? but work with your tax advisors because it's not always a great idea to make the decision to deduct everything for a number of reasons. One, there again, we talked about kind of these ups and downs in taxable income and how that can sometimes lead in the long run to higher taxes than if we even out our tax liability over time. So that requires some planning. And, with those two code sections that I mentioned, that 179 and that 168, you can use those differently and your tax advisor can work with you to plan in those spaces. So I think one thing that's important is don't always assume that accelerating everything is the right answer. There may be reasons why you may want to stretch out those depreciation deductions, and you have the ability to do that. So that's one thing. Definitely look at your accounting methods. Do that early on in the year as you're thinking about next year. When we change accounting methods in tax, we have to do that in advance of filing that tax return. So that's something that you can't necessarily go in arrears and do. You want to make that adjustment. We have to ask for the IRS permission to make those changes. And your tax advisor is going to have to work with you closely on that as you get prepared for everything. We talked about some of the accounting around meals and how that's going to be a little bit of a challenge. What we didn't touch on a little bit, another just kind of added benefit is for those construction engineering companies that might be doing R&D related work. They're going to have some accelerated deductions because we're back to currently expensing in R&D. So there again, we have options there. We can current expense, we can stretch out. So one of the themes is kind of around modeling, right? What makes sense for your company? Are we going to take some accelerated depreciation deductions or accelerated deductions in general, or are we going to look to stretch those out? The owner compensation and entity structure, we talked about the QBID deduction and how that's a permanent item now. And so that's probably something that you want to look at again. Is your entity structure, it is the right structure for your business and what you're projecting your income to be for your business. As you're looking at that, also look at wages and some other things that impact that calculation. So those are a few tidbits of things that you might want to think about this next year. There again, working with someone who can help you put all those pieces together.
Well, this was definitely a lot of information, but before you go, we have a rapid fire round for you. So we're just going to list off some things and you're going to give us your quick response.
Okay.
Okay, what is one thing contractors should never wait until the end of the year to think about?
I think how you're going to treat your assets, depreciation methods.
Okay, bonus depreciation or Section 179, if you had to pick one that contractors ask about the most.
179, and 179 is the one that you want to do if you can, but there are some limitations which cause them to go into 168.
Okay. One expense contractors often think is deductible, but it isn't.
I would say probably entertainment related expenses. And sometimes employee benefit related items that aren't termed employee benefits. So gym memberships, for example, are not deductible, and oftentimes they think they're deductible.
The one record or report that every contractor should know how to find at tax time.
Definitely your financial statements. You have those, the record or report.
Sounds like might be the W-9.
I was like, you should just say everything.
Oh, the W-9. Oh, yeah, everything. The W-9s are really important at year end for your 1099 reporting. And also purchase agreements for all your documents, related to any of your equipment purchases. Those are super important. Your tax advisor is going to need those.
I think we've talked about this a lot, but cash or accrual, which one do most contractors think they should be on?
They should be on accrual. They usually, we oftentimes see them start off on cash.
Okay, and one habit that separates contractors who stay ahead of taxes from the ones who scramble.
When we have meetings throughout the year, I can't tell you how big of a difference that makes. When we're meeting just once or twice throughout the year and we're forecasting your taxes and we're talking about all the things that we need to plan for, it helps you manage your taxes down every time. We save money, the company saves money, the individual saves money. Everybody is stress-free going into tax season because we've already laid out what's going to happen on the tax return. Now it's just a matter of getting it on forms. We have seen that process over and over again just be super powerful.
Yep. We'll be needing to set up a meeting with you soon.
Yes, very soon.
Well, thanks for joining us today, Rebecca. Can you tell people where they can learn more about your business?
Sure. Our website is www.testutailor.com. And we enjoy the work we do. We love the work we do and the companies and the individuals that we serve. And we just encourage you to give us a call and we'll get you on the calendar.
Yep. We'll be sure to share the information.
Yep. Thank you so much.
Thank you.
Thank you. Thank you, guys. Take care.
Want to grow your network and your business? Join Contractors Connect, the go-to networking group for professionals in the building industry. For just $400 a year, members get 4 complimentary meetup tickets per year, a featured spot in our online directory, visibility at every Contractors Connect event, and more. Whether you're a contractor, vendor, or service pro, there's a place for you here. Join today at contractors-connect.com/memberships, and let's build something great together.
All right. Now it's time for Voices from the Booth, where we talk to our attendees at events. So, Lindsay, I know you've got some clips lined up for us. Who's first?
Yes. So first up, we've got Victoria with the Gilman Group, who was our Trade Talk booth sponsor in Bay County at one of our recent events. So let's hear.
She has been coming to all of our events from the beginning. So.
Yeah, she's fantastic. Let's hear what she has to say.
Hello, we are here at the Bay County Contractors Connect here in Panama City Beach, and I am here with our Trade Talk booth sponsor. I'm going to let you introduce yourself.
Perfect. I am Victoria Gilman. I am the broker owner of Gilman Group Realty, and we specialize in new construction, and we love coming to Contractor Connect, building relationships and being able to bridge the gap between sales and real estate and construction and all the things.
We love Victoria.
Yes. Okay, so next up, we've got Gage, who was a first-time attendee in Bay County, and he is with Process Service Specialist. So let's check him out.
Okay, we have another visitor here at the Trade Talk booth here at the Bay County Contractors Connect in Panama City. I'm going to let you introduce yourself.
My name is Gage Jeter. I'm with a company called Process Service Specialist.
Awesome. Thank you for being here, Gage. Can you tell me a little bit more about why you like coming out to the Contractors Connect event?
Absolutely. So these contractors events are a very good networking tool. It allows you to meet all different people from different companies to really benefit you, the growth of a company, and to just grow your company. It's really good. It's a great time.
That's awesome. Well, thank you so much.
Okay, awesome hearing from Gage at Bay County.
Love to have first-time attendees.
Yes. And last up, we've got Ray, who is with ProWood Lumber and Decorators Composite Decking. Wanted to make sure I got that right. They were also a sponsor at Bay County, so let's hear what they have to say.
Yeah.
Hello there. We have another sponsor visiting us here at the Trade Talk booth at the Bay County Contractors Connect in Panama City. I'm going to let you introduce yourself.
I'm Ray Dixon with ProWood Lumber and Decorators Composite Decking.
Awesome. Thank you for being here.
Glad to be here.
Can you tell me a little bit more about why you like coming out to the Contractors Connect event?
It's a great chance to meet other contractors. The contractors are typically driving the business with their decision making with the homeowners or with the companies that they're working for. So the chance to get out and meet folks and introduce yourself and make the relationships is important in this business.
Yeah, I love that. And you're sponsor of the event.
Absolutely. We believe in all of this. We believe in the BFS stores, and we want to be out here to support them.
Well, that was great. And we thank all of our sponsors that come out to our events. We love seeing them and getting them on camera. But just a reminder to everybody, even if you're not a sponsor, come visit me or Claire or whoever happens to be in the Trade Talk booth and give a shout out to your business.
Yes, and a special thanks to the Gilman Group for sponsoring the Trade Talk booth in Bay County.
Hey, Emerald Coast contractors, big news. Contractors Connect is heading to Okaloosa County for the very first time. Join us March 5th from 4:30 to 6:30 at AJ's on the Bayou in Fort Walton Beach. This is a laid-back, high-value networking event where contractors, subcontractors, and home pros come together to build real relationships. Tickets are just $25 and sponsorships are still available. Grab yours now at contractors-connect.com. We'll see you on the Bayou. All right. Well, huge thanks to Rebecca Kelly with Testu and Taylor. We love her. She's actually our accountant as well. And she hopefully broke down taxes and planning in a way that makes sense for our listeners and contractors.
Absolutely, because that stuff is all Greek to me. All right, well, if you liked this episode, please be sure to give us a like and a follow, and be sure you're following along on social media. We are going to be taking Trade Talk on the road. We're headed to the International Builder Show in Orlando coming up in a couple of weeks, and follow along. We're going to be sharing clips and tips and all the things we see and do.
Yep. And don't forget, season 2 is just getting started. So continue listening for more impactful guests and topics that will hopefully help you in your business endeavors this year.
And be sure to let us know if there's a topic that you would like us to feature. Feel free to send us a message or email us at info@bespokeconsulting.com. We'd love to hear your feedback. But I think that's a wrap on this first episode of season 2.
That's it.
All right, see you next Tuesday. Thanks for tuning into Trade Talk, powered by Contractors Connect, where construction pros connect, share, and grow.
If you enjoyed today's episode, be sure to like and subscribe, leave a review, and share it with your crew.
Until next time,
Stay sharp,
stay safe,
and keep building.